Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, June 21st, 2023. And our top story today, getting married? Have you had the life insurance conversation with your partner? And joining me now to discuss this and a lot more, Phil Snyder is the Senior Vice President at the Warner Companies. Dad, it's great to see you again. Thanks so much for joining us on the program this morning.
Oh, Jeff, it's my pleasure as usual.
All right, so we're going to talk about life insurance, and there's a lot of things we have talked about, but let's start off the conversation with people are getting married. So how do you have that conversation? Do you need to have the conversation upon getting married with your partner about life insurance?
Well, life insurance is a financial tool, so it's naturally should fit into any conversation that a young couple has. In fact, it probably ought to fit into the conversation before they're married, because if a marriage is a joining of two lives, and two lives should be contributing equally to pretty much all the decisions that couple is going to make, not only today, but in the future. So I think life insurance should be part of the conversation. Absolutely.
And does it matter, Dad, if you're a young couple, say you're married for the first time, or a more mature couple where you're joining together, say one of the partners, I should say, my apologies, it has been married in the past, or one of the partners has significant financial assets. Is there a difference between the types of conversations?
Oh, sure. Absolutely. A young couple just starting out, let's say they don't have a lot of assets accumulated individually, then naturally you're going to want to give thought to looking downstream a little bit. That young couple may buy a home, for example, and incur a mortgage, some debt. In time, they may have young children. So I think certainly they should have that conversation and begin to plan ahead. One way to plan ahead, frankly, is to just buy some term life insurance, which is a relatively inexpensive product. It's easy to get today. The process for getting it is pretty simple. Just find a quality broker, someone you can trust, someone that others around you may have used, so they come to you as a good referral or a reference with references, and buy convertible term insurance. Convertible simply meaning that there's a provision in the term policy that allows you to exchange it for a more permanent product in the future without having to prove that you're medically eligible for coverage at that time. So, I mean, that's just a way of kind of starting out. And I did that when I was young. And then, of course, we bought a home, and you and your brother came along in time, and the responsibilities expanded dramatically. And I was early on in my career, much like other people. And so we bought a whole bunch of term insurance, and that just gave us the wherewithal and the confidence that if anything happened to me, for example, that there'd be a lump sum of money that could cover all those expenses well into the future. So that's kind of the idea.
Yeah, that stork was pretty busy. Dad, let me ask you about the amount of life insurance. How do you figure? So if you're a young couple or a mature couple, you talked about term life, and we've gone through the details. I think you have to sit down with that insurance professional to figure out if you want whole life, if you want term. We're not going to rehash that conversation. People want to watch that, they can go back and search on the network to do that. Mm-hmm. But how do you determine the amount? Because it's hard to, if you're a young couple versus an older couple, of insurance that you need.
Well, if you're a young couple, and let's say you have a mortgage, you have children, you sort of got to sketch things out on a piece of paper. It's not really that difficult to do, but you may need some guidance because you may not have thought about these things in the future. And that's where a professional comes in, or other people come in, or family members who are more, mature and have gone through this process in the past. And you gather all that information and you begin to quantify what are all those expenses downstream. What's education going to cost? I mean, Lord knows college today for children, getting out of high school is an enormous expense. And if you're projecting out 10 or 15 more years from now, it's going to be that much bigger. But the good news is you can meet that in the short term relatively inexpensively. Doesn't take a lot of money to buy a whole bunch of life insurance when you're 30 years old, for example. So I just think it takes the wherewithal and the awareness of what the responsibilities are, and you can sketch them out. Or insurance companies, I guess they still do this. It's been a little while since I've done it, but they used to have charts and mechanisms. All that's probably automated now, and you could probably even go online and get some projections as to what those future expenses may be, and just quantify what the obligations are. Not that
Last question. Go ahead.
When you're talking about mature people, that's a different situation. Expectations may be different. Asset accumulation could vary between the members of the couple. So you have to take all that into consideration. You also have to take into account how you feel personally about things. I mean, in my experience, I've had people who said, I'm not buying insurance under any circumstances. If I'm going, when I go, I don't care anymore. That's an awful attitude, but I've had that experience. And then you have others who say, listen, I don't want to get deeply into conversation about this, but just sell me this. But the truth is, in between those two extremes, you can help people by gaining a better understanding of what their assets are, what their obligations are, how they feel about those obligations, and so forth. So you got to get into an in-depth conversation.
Last question, and then I have to go to a commercial break to, we got to pay the bills here. But let me ask you about, how do you balance, you're a newly married couple or you're a mature couple, and your employer offers life insurance. So do you buy life insurance? Do you buy that life insurance through the employee benefits package and then buy supplemental, or you just, how do you make that type of decision? Because many employers as a benefit offer once or twice the current salary as a benefit, a life insurance benefit, should you pass away.
Yeah, well, there are two aspects of that. If it's an employer paid benefit, the employer is buying life insurance, let's say equal to 1 or 2 times your annual base salary. The only cost is minimal for that. You have to pay tax on the value of the insurance above $50,000, and that's going to be relatively low numbers. There are many of those plans that have optional coverage that you can buy. And the optional coverage sometimes has a guarantee issue limit to it. So you can buy some insurance through your employer, relatively modest amounts, even if you're unhealthy. By and large, though, if you're healthy, that type of coverage can be expensive. Vis-a-vis if you went to the open market to buy comparable coverage through a term policy of some sort. So again, you need some guidance. The problem with the employer coverage is it goes away when you're no longer with that employer, and people are very mobile today, much more so. In the old days, my old days, people stay with the same employer perhaps forever, or that maybe they move once or twice. Today, people may move 4, 5, 6 times. So you may not have that coverage when you move to the next employer. So you just you don't have control of that coverage. I'm not saying it's bad. It's available, it's convenient, it's easy. It's typically payroll deduct, so you don't have to write a check. But at the same time, you have to realize that you don't own it.
Right.
Well, Dad, go ahead. I know you need to take a break.
Yeah, I do. You can pick up that thought when we come back. When we come back, do you need life insurance at retirement? Well, it kind of depends, and we're going to discuss it. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're joined this morning by Phil Snyder, Senior Vice President of the Warner Companies. Dad, thanks so much for staying with us this morning.
Okay, let's go.
Yeah, let's go. But before we get to retirement, did you want to make another point? I cut you off
No,
going into the commercial break.
You know, it's everything depends on the circumstances, and that's where you need to dig deeply, as deep as people will let you go, and figure out what they have, what their goals and objectives are, what and how they feel about providing for their spouse. One way or another, they're providing through income they're generating. What happens if that income goes away? How's the surviving spouse going to manage? Oftentimes, there's a disparate a change or difference, I'll call it, between the earnings of the two people. So, and the one who earns at a lower level may be dependent upon the income of the one that earns at a higher level. So what happens if that income goes away? So you have to take all that into consideration, and then you have to determine how people feel about this. What's their thought process?
Right.
It's a conversation, or sometimes a 2 or 3 conversations to come to some conclusion.
Yeah.
So, but I don't think it's science. I think it's more art.
Yeah. Well, I agree with you. I think it's a part of a conversation.
Exactly.
Dad, let's shift gears a little bit. Let's talk about needing life insurance in retirement. So imagine someone hitting retirement age. They decided to stop working.
Mhm.
They've got a pool of assets. It may not be large, it may be large. Do you need life insurance when you reach that phase of your life in retirement? Do you need it?
It depends.
Well, thanks. That was my lead in going into the commercial break.
I know that's not much help, but it does. It's predicated upon what are your circumstances. In other words, if you have adequate assets on the side and you have a stream of income coming to you, and that stream is adequate, and you have no major obligations post-retirement, then maybe you don't need life insurance. On the other hand, I'm working with an affluent client now, and he's got big mortgages on investment properties that he'd like to hold on to. But if he passes away, a lot of that income that's being generated is going to go away. So he would like to buy some life insurance just to cover that, and we'll do that simplistically. Then again, you may have people who are affluent people who keep insurance into retirement for estate tax purposes. So that's the extremes there. I need it because I don't have enough money. I have people who have retirement benefits, but those retirement benefits, maybe they're from a qualified plan. That money may go away. It may not continue depending on the elections made when the money began its payout, that money may go away or be reduced if the retiree becomes deceased. So you got to take all those things into consideration and say people don't like paying life insurance premiums. That's for sure. So having life insurance in retirement is something that may be needed, but then again, it may not be. And people can just have to make that determination. It's a lot of what ifs. So I know that's not giving you a definitive answer.
Well, I don't, but I also don't think these are cut and dry issues because we're
They're
dealing
not.
with people and their individual, but you're right. There's an opportunity lost or an opportunity cost for paying premia. But let me ask you a question. When you're in retirement, how do you factor in term life, just generic term life and generic whole life? Because I can see the value, you're building up and accruing value in a policy with whole life. So does that conversation change versus the couple that was just getting married to people who are in retirement? Do you change your mindset, or can you use term life in retirement? Should you use term life in
Back
retirement?
to my one client, for example, he's got a mortgage. He's actually got a couple mortgages on some investment properties. So, but those mortgages are going to be paid down in 10 years. So he wants to have some short-term coverage. So term insurance is ideal. Then again, if you don't have enough money and you can afford to pay premium, you might want to buy a permanent policy to protect the surviving spouse, for example, if in fact the major wage earner and the source of the retirement monies go away, then you might buy permanent insurance. But the idea of buying permanent insurance in retirement and beginning then is subject to medical qualification. If you're going to buy a policy later in life, not so easy to buy it, and it's going to be very, very costly. So you have to think these things through, and I guess it comes back to doing reviews during your life, working with a qualified broker, agent, whomever, financial advisor, who visits with you, I'd say at least once a year, and reassesses your situation and projects out into the future how things are going to probably play out. And so you want to take all that into consideration. If you think you're going to want to buy insurance for the long haul, it's better to buy it when you're younger. It's going to cost less and it's going to perform better and it's easier to get.
How do you balance, we in the retirement industry in particular, we talk a lot about annuitization. That's a huge, retirement income for life, longevity. How do you balance that life insurance purchase versus rolling your balance into an annuity? Because theoretically, an annuity, you're paying for that guaranteed income. Wouldn't that pay you a benefit into retirement? And would that benefit be enough to pay some of the expenses you were talking about, like funeral, burial expenses, hospice, or some of those other expenses that you have? So how do you balance? They're similar products, but they're very different.
Well, I mean, if you're saying that I'm going to take my money and buy an annuity, that annuity is going to give me some kind of not an investment annuity, but not a deferred annuity, but an income stream. That it depends the type of annuity you buy. Do you buy an annuity with a life only? And I know we're going to get a little down in the weeds here, that if I have the annuity on me and I die, the annuity ends. That wouldn't be a good choice, but it is a choice, versus the annuity continuing for 2 lives, my life plus the life of my wife, for example. So you have to figure out what is that annuity and how is it going to play out over time? And is that money going to be adequate? Or do I need to supplement it in some way or another, particularly if I'm the first to die as the annuitant? So I think it's just a financial analysis, and it's really not that hard. I think our industry tends to overcomplicate all this stuff to make up, the people selling it maybe present themselves as being more important than sometimes they really are. It's just sitting down with people, particularly people who don't have so much money, who aren't sophisticated, financially, and who don't have all these relationships with brokers and investment people. They're just people who are making their way through life and they need some direction and a little bit of guidance. That's really all you need to do. Make them aware, help them out, talk through these issues, and then you come up with solutions that are hopefully affordable.
Yeah, well, don't get me started on jargon. I completely agree. I think it's a turnoff to people. It gets in the weeds. And look, we're not curing cancer. We're not doing God's work, if you believe in God.
Yeah.
We're just trying to facilitate and help people. Dad, we're going to have to leave it there. Great conversation. As always, great to see you. And I know I wished you happy Father's Day, but I'll officially do it on the program as well. Good to see you as always. Take care. And we'll have you back again very soon.
All right, Jeff. Thanks so much. I hope it was helpful. Bye now.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest creative news and lifestyle, wellness, finance, tech, so much more in all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.